next week, the first week of February. A new week is always exciting. The first event is important. Chinese PMI, we have the independent one and the Caixin one and the government one. The independent one is more important. Manufacturing PMI, we might see another negative number, another figure under 50 points, and that could create worries, could hit the Australian dollar. But if we have some kind of recovery, it could be, of course, positive. It's not only important for the Australian dollar, it also impacts oil prices, it also impacts the global mood. And it's the first release for the week. ISM manufacturing PMI on Monday, first hint towards the non-farm payrolls. It was negative, under 50 points in the past few months. It could be negative once again. Let's see how bad the US manufacturing sector is. Manufacturing all over the world doesn't look good. On Tuesday, we have rate decision from Australia. Given the recent CPI numbers, they're not expected to cut, but they might hint to further cuts later this year if things deteriorate. Expectations are now for a relatively upbeat move, but you never know. Also on Tuesday, we have, focus on the antipodean currencies. We have the employment report in New Zealand together with milk prices on the same day. Let's move to wider events. We have on Wednesday, we have the ADP non-farm payrolls. Recently, ADP NFP has been better correlated with the official government figures, so it's important. Last time we had an excellent ADP of 257,000, and it implied a strong, and eventually on Friday, we had an excellent official non-farm payroll, so let's see if it remains strong again. We also have another significant hint. We have the ISM non-manufacturing PMI, the services sector, which is doing much, much better, and it's much larger than the manufacturing sector in the United States and also in other developed economies. And this is the significant hint towards the non-farm payrolls. On Thursday, we have the UK rate decision. It's not the rate decision itself that matters because no change is expected. We also have the meeting minutes and the voting pattern. If we still have 8 against 1, it's positive for the pound. But if we have a unanimous decision about it's not time to raise rates, then I expect, of course, a fall in the pound. And on Friday, last but not least, used to be king of forex, maybe still is, but it's a bit losing its charm. And the non-farm payrolls in the US, I don't have expectations at this moment, but I expect it to be weaker than last month's super figure of 292,000. Remember, not only the jobs, but also the wages matter, okay? And at the same time on Friday, we also have the Canadian jobs report for those of you trading Canada. But remember, the loonie moves more with oil prices more than anything else. Okay, so that's this week. The big event, I'll just mention it once again. The Fed decision that we had on Wednesday, it was slightly dovish. Growth slowed in late 2015. That's a hint for today. Inflation is still a big worry. They removed the reference to balanced risks, which I don't see as that important, but many analysts talked about that. They're monitoring global and financial developments. That means China and stock markets. And despite a new hawkish composition, they voted unanimously for a dovish decision. The expectations after this for a rate hike in March became lower. And after the bad figures yesterday, they became even lower. And let's see how GDP impacts expectations and impacts the dollar. The week and the month were exciting, and they both end with a bang. Okay, so I guess it's time to go. Thank you very much, everybody, for coming. Thanks for the great questions. Thanks for the participation. Do join us, Valeria, Dale, Mauricio, and I, if I'm not mistaken, at 1 GMT for coverage half an hour before the GDP release. Okay, should be an exciting close to the week. On Monday, I will not